Hey, family, Happy New Year. This is everyone's favorite time of year where you turn in updated W-4s to your employer. So, in this video, we're going to look at an example of a single taxpayer, but then we're going to go through different scenarios, such as having no dependents, different deductions that you may qualify for, how to account for those on your W-4, even if you have other income and multiple jobs. All right. So before I get into it, my name is Timlin Bowens, and I am America's favorite EA. As an enrolled agent, I am licensed through the Internal Revenue Service to represent taxpayers before the IRS in my firm, Bowens Tax Solutions, which is a virtual firm based in Louisville, Kentucky. I represent taxpayers who owe $100,000 or more, or the IRS is levying their account, or they're facing an audit or a tax bill that they can't pay in full. And what I've found over the years is that a lot of people tend to owe because they don't understand their tax filing obligation. So that's why each year I do this W-4 series. So the W-4 is for you to turn into your employer to make sure that the proper amount of federal income tax is withheld from your pay. If too much is withheld, you end up with a tax refund. If too little is withheld, then you end up with a bill. Okay. Now, a lot of people will ask me, how do you go exempt on this form? I don't advise you going exempt. You can claim an exemption, but typically you need to meet two qualifications. Okay. You had no federal tax liability for the prior year. Okay. And you don't expect to have one for this year. Now, having a tax liability versus getting a refund are two different things. All right. But if you were a single taxpayer and you wanted to just go exempt, not have any federal taxes withheld from this job, you would put your information up top. And then right here, exempt from withholding, you were signing this under penalties of perjury that you want to claim an exemption from withholding for 2026 and you certify that you meet both of the conditions for exemption for 2026. And you also understand that you'll need to file a new W-4 for 2027. And excuse me, I said file, but I actually meant to say you'll submit a new one with your employer. Okay? So, now that we got that out of the way for the people who want to file exempt, let's talk about our taxpayer who is single, they have no dependents, they only work one job, and they don't have itemized deductions or any credits. For that taxpayer, you are going to fill in your first name and middle initial the way it shows up on your social security card and driver's license. So, in this example, we're going to use Stephen J. Hyde. All right. Shout out to all my millennials checking this video out. If you know who Stephen J. Hyde is, let me know down in the comments. Then you're going to put your address. So for Steven, it's going to be 416 Marie Drive. He lives in Point Place, Wisconsin, and the zip code is 53140. Now, in this situation, let's say that you're somebody who moves a lot. You want to make sure that you put the best mailing address for you. Let me give you an example. When I was in college, I went to college in Louisville, Kentucky. However, I did not have a permanent address. So I would use my parents' address in Evansville, Indiana, because that way I could ensure the mail was going to get to me. Okay. Now, it gets tricky when you're in a different state than your permanent mailing address, and I can go into that in a different video. Next, you're going to put your social security number here. All right, so for Stephen, we have 202-62-0262. and it has to match the Social Security card. Next, we're going to check this box, single or married filing separately. He's not married, so we're just going for single here. Now, if you're unmarried or pay more than half the cost of keeping up a home for yourself or a qualifying individual, you could potentially file as head of household. I'm not going to get into who qualifies for that right here, but I do have a podcast episode on tax relief with Timbaland Bowens that goes over the details of who is eligible to file head of household. Okay. Now, steps 2 through 4 are for people who have multiple jobs or have a spouse that works, that claim dependents, or if they have other dependents, so a qualifying individual that they claim on their tax return. And then step 4 is for other income, not from jobs. So this could include retirement income. This could include pension income if they have rental properties or if they trade crypto. Whatever that other stream of income would be, that would be accounted for here on 4A. Deductions, such as now we have the enhanced senior deduction, we have the overtime deduction, and we also have the tip deduction. Those are included with things such as charitable contributions, medical expenses. Those things would be accounted for here. And remember, this is going to be a projection. Now, 4C is for folks who work multiple jobs, or if you just want a little extra withheld from your paycheck because you don't like dancing on the line between owing and getting a refund. That would be accounted for in 4C. If multiple jobs, dependents, and other adjustments don't apply to you, you can skip 2, you can skip 3 and 4, and you, my friend, can just sign this line here, date it, and turn it into your employer. Now, for a lot of employers, they actually have you fill this out in an online system. You would follow the same steps, and at the end of it, only this part should be filled out with this box checked as single or married filing separately, your signature, and the date. Okay? Now, we're done for our folks who don't have dependents or anything like that. Let's look at individuals who have a dependent that they are claiming on their return, but they don't qualify to file as head of household. For them, let's say Stephen has a little Stephen, right? Same information up top. We're still going single or married filing separately. We can skip step 2 because in this example, we do not have a second job, but we have a dependent that we can claim. So if this person is a qualifying child under the age of 17 for this tax year, the child tax credit is actually going to go up by $200 to $2,200. So if there's only one, this would be Stephen's credit for that child. Okay. Now, let's say that Stephen's able to claim somebody, but is a disabled relative, right? They're over the age of 17. So that would be considered an other dependent, not a child dependent. In that situation, we have $500 here to account for that $500 credit. All right. So let's just say in this example, he's claiming 2 people. So the total credits that we're looking at here is $2,700. Now, keep in mind that the W-4 is designed to help you have more of your money throughout the year and not get a big refund. That means if you add these credits to the W-4, you essentially are dividing them by the amount of pay periods you have left throughout the year, and you'll receive that additional income throughout the year. So right now, we have what, 26, 25 pay periods left for the year if you get paid every other week. So with that being said, we would divide this 2,700 up by 25, and that's how much extra you would get in your paycheck. Now, if you're cool with not receiving that extra in your paycheck, you wouldn't want to put this, and then you would potentially get this in the form of a refund when it comes time to file your taxes in 2027. But it would not be this full amount because the refundable amount of the child tax credit is going to be $1,700. Okay. But in this situation, Stephen is going to claim them. So we have the dependents there. So Stephen doesn't need to fill any of this out. He's going to sign it, date it, and turn it in. Okay. So we're done with our folks that have dependents. Okay. So the next thing that we are going to take a look at is our folks who itemize. All right. So let's get rid of these here. So let's not say itemize. Let's just say you take into account different deductions because this could be a retirement deduction. This could be um, the no tax on tips. It could be the no tax on overtime. So let's say in this example, Hyde is working at the grocery store. Okay. And while Hyde's working at the grocery store, he's going to be able to take advantage of the no tax on overtime. All right. So with the no tax on overtime, the premium amount that you're being paid can be deducted if your income fits a certain threshold. I've gone over that in an episode on tax relief with Timbaland Bowens, and I've also gone over it in an episode where I did an overview of the One Big Beautiful Tax Bill. Check that episode out in the notes. All right. But to figure out these different adjustments, let's say that Hyde also is trading some cryptocurrency, right? And he's expecting to make $1,000 profit. Well, no taxes are withheld from the cryptocurrency, so he puts the $1,000 here so that on his W-4, it will also withhold money for that $1,000. Now, these other deductions that we're going to take a look at, we're going to go to the worksheet on page 4 to determine the amount of the deduction that can be claimed. And keep in mind, if we're putting a deduction or if we're putting a credit on the W-4, that means you are benefiting from it throughout the year versus getting it in the form of a refund when it comes time to file your taxes. So moving along to page 4. So for the job at the grocery store, he's not getting tips, even though back in the 70s, it's likely that he could have got tips for bagging or he could have gotten tips for taking people's groceries out, but we're not going to have that in here, right? We're looking at the overtime compensation. So if his total income, because he's single, is going to be less than $150,000, and let's say our boy Steven is getting paid let's say $20 an hour, right? That means when he gets paid overtime, he's going to make $30 for that hour. The premium is going to be $10, right? Because his base rate is already 20. The overtime rate is 30, so we're taking 30 minus the 20. So when we do that, he's going to be able to deduct the $10. Now, let's say that Hyde is going to be working 100 overtime hours for the whole year. That's his projection. So 100 times this $10 is going to give us 1,000, right? So that is going to be the amount that he can deduct from his tax return. The next one we want to look at that's new for this year is the qualified passenger vehicle loan interest. Stephen likely isn't buying a new car for 2026. If he was, any interest that he paid, he would be able to deduct if his income is less than $100,000 since he's single. Since he's not, we're going to put a zero there, okay? So for line two, we're going to add lines 1A through 1C, and in this scenario, we have $1,000. All right? Now, he's not a senior, age 65 or older, so we're just going to put zeros here. All right? Not even going to take a look at it. Stephen didn't go to school, so we don't have to estimate the student loan interest. He's not contributing to an IRA, so we don't have anything here. No alimony paid before 2018, so another zero, okay? Now, since the Tax Cut and Job Act, the standard deduction was doubled. That was extended under the One Big Beautiful Bill Act. So Stephen actually doesn't even have enough to itemize. All right. So 6A through 7, we can put zeros, right? And then 8 as well. And you don't have to actually put zeros in here. Well, for most employers, let me say, you don't have to put the zero. I'm just doing it right here for demonstration purposes. All right. Because Steven's standard deduction is already going to be $16,100. So he's good. He doesn't have any home mortgage interest that's going to go over that, any gifts to charity, medical expenses, right? Now, one thing that I do like that we have now under the One Big Beautiful Bill is that there can be a deduction for people who do give to charitable organizations, even if they don't itemize. So for our single folks, that maxes out at $1,000. For those married filing jointly, it's $2,000. In Stephen's case, he didn't give anyway, so we're good there, right? So here we're going to add lines 11 and 12. It's still going to be 16,100, which is for his standard deduction being single. All right. So here in 14, if line 10 is greater than 13, subtract 11 from 10. Well, in our situation, it's not. So because line 13 is greater than line 10, we're going to enter the amount from line 12. All right. But guess what? Ta-da! So we have lines 2, 4, 5, and 14 that we're going to add up. So we have 2, it's 1,000. 5 was 0. What was my other line? Oops, 2, 4. So 1,000 from line 2, 0 from line 4, 0 from line 5, and then 0 from line 14. So we only have the $1,000 from the overtime deduction that we are accounting for here. So we're going to enter this result in step 4B of the W-4, right? And then Stephen wants no extra withholding. So in this example, we have Stephen. He's single, married, filing separately. He works one job. He has no dependents, so we're not claiming any. Then here we have the income from his crypto trading. Then we have, I'm sorry, the $1,000 deduction from his overtime that we are estimating he could work more or less overtime, right? And then no extra withholding. At that point, he can now go ahead and sign, date this, and turn it into his employer. Okay? Now, last but not least, we're going to take a look at people with multiple jobs. So let us take this out of here. Okay? So we know that Stephen worked at the radio station as well as at the grocery store. So how do we figure out how much to have withheld so he does not end up owing? Well, the IRS actually has a withholding calculator that anybody can use, and you can visit irs.gov. I don't know if that's a backslash forward slash W-4 app. And actually, if you Google the W-4, you can click on it right here and it'll take you directly to that calculator. But if you've been here this long, you might want to do it with me. So let's look at the table, all right, to figure out how much to have on line 4C. Now, in this scenario, if Steven is making the same amount at the radio station as he is the grocery store, he could just check this box, sign, date, and turn it into both employers. However, let's say he's not. Let's say he's working the grocery store and now the radio station is his side gig, right? So, for the purposes of this example, let's say Steven's making $40,000 at the radio station and $20,000 at the grocery store. All right. We're going to go to the multiple jobs worksheet on page 3, okay? Just so I can show you how to go through it. So if there are two jobs, we are going to go to the next table and we're going to use the higher paying job row and the lower paying job column to find out how much extra needs to be withheld throughout the year. Okay. So we have to make sure we're in the right filing status, which is the single or married filing separately. The higher paying job row is going to be right here. Remember, he's making $40,000 at the radio station, and then he's going to make $20,000 at the grocery store. So I always tell people, and if you watch this video each year, you know, this is why you learned algebra, to be able to fill out your W-4, right? So the amount that he needs to have withheld extra is $3,230, right? Now, some of you guys might be like, oh my goodness, like this is highway robbery. They're robbing us with these taxes. Hang on, did I put the right number in? I certainly did not. 3,250. But here's the deal. When you fill out a W-4 for one job, they're only taking into consideration that standard deduction that we talked about before. Remember the 16,100. They are adding that to the job that you're working. But in this case with Steven, he only has the radio station taking into consideration the 40,000 he's making there. And then over at the grocery, they're only taking into consideration the 20,000 he has there. What will happen if he doesn't do this extra step is when he combines those incomes together on the tax return, he'll end up being under withheld, okay? Because his income is actually higher than what the employers have noted, okay? So if he is getting this in before his February paycheck, we're going to divide this by 26. So we're going to skip 2 because that's if you have 3 jobs or more. In line 3, we're going to say how many pay periods we have left. So let's say 25. So 3,250 divided by 25 is going to be 130. This is the number that needs to go in 4C. And most times people have this withheld from the higher paying job. However, you can choose to do it where you have this amount withheld, or I'm sorry, you have this amount divided and withheld however you like from whichever job. So in Steven's situation, he could take this 130 and divide it by two and have $65 withheld from the radio station and $65 withheld from the grocery store. It just depends how you want to do it, but you have to make sure that at the end of the day, $130 being withheld grand total for the pay periods. All right. So then we would take this, sign it, date it. All right. If you've stuck around so long, how have you not followed the page? If you found this video insightful, let me know down in the comments. Make sure that you like, subscribe, ask whatever questions you have in the comments. And this is a free video to help you. But if you'd like to say thank you, there is going to be a link down in the comments where you can buy me a coffee, but only if you want to, right? Hope you have a wonderful day and you found this helpful. Make sure that you share it with somebody else too, because I'm on a mission to fill the tax literacy gap one taxpayer at a time, and every like and share helps me do that. I'll see you guys in the next video.